Good morning. First of all, it's a great honor for me to be here with you, and thank you, Luca. Thank you, Sergio, for organizing this discussion here. That's a unique opportunity for many of us to visit other sites of Europe. I mean, I come not from Chisinau, but from Brussels. So like everybody going all the time to Brussels, and probably I go back to Brussels on my way to Chisinau. And thank you, Luca, for having such a great introduction, preaching for Europe. And yeah, that's the mood of probably many people nowadays, especially. So let me tell you a few words about Moldova. Yes, I'm a governor of Central Bank of Moldova. Moldova, not Maldives. That's the usual joke. Actually, I've never been to Maldives, but okay. And so let me tell you a few words about the central bank, the economy, and of course a few words about the mortgage that we are developing, because we are very serious in catching up Europe in all sectors, finally in standard of living. So Moldova, it's a small country. On the map, it's with orange. Yeah, it's not, the white is Ukraine. So it's a country between Romania and Ukraine. It means that we are at the border with a war. And, okay, as of yesterday, at the border with a political crisis. We have a low unemployment rate. It means that, yes, we do have a labor scarcity, and many of our Moldovan citizens are working in Europe. We have, you'll see later on that we have a high level of remittances from our large diaspora. We are a candidate country. As of 2022, when the war started, Moldova submitted the application. We had an accession agreement back in 2012, but we accelerated after the beginning of the war in Ukraine. And now in December, we actually started the technical negotiations, and we hope to open negotiations pretty soon during the current presidency of the Council. In terms of GDP per capita, how can we read this graph? It means that we have a way to grow. And also we have ambition to accelerate convergence to the EU. And I may tell you that countries like Slovenia, Lithuania, Estonia, Hungary, 20, 25 years ago, were in the same position as Moldova is today in terms of GDP per capita, also GDP as share of average EU. So we only have to keep the good track. Okay, on inflation, things were a little bit complicated after the beginning of the war, as the country was almost fully dependent on Russian resources. And that's why we had a horrible peak on inflation. In October 2022, inflation reached 34.6%. But nowadays, inflation went down, and we are in the corridor still. Our inflation target is 5% with a corridor of plus minus 1.5. I think you have figures from December. Today, as we speak, situation is a little bit better, but we are sensitive to what's happening on the oil market. So what happened after that, that peak of inflation? And in the energy sector, some significant measures have been taken over the last 4 years, accelerating the interconnectivity with Europe in terms of electricity, increasing gas deposits in Romania, and also increasing the share of renewables. Renewables grew from 3% of total consumption to almost 20% in only 4 years. On monetary policy, yes, we were forced to increase policy rate to 21.5%. That's an amazing figure for most economists. But it was also we increased reserve requirements in order to drain the market. Today, our policy rate is at 5%, and also we were able to significantly decrease reserve requirements. Over the last year, we were in a more accommodative mood of the monetary policy, also considering the fact that we still have a negative output gap. Financial markets are growing, are developing, are an initial stage, like the capital market you'll see later on. And still the yields for government debt is still high. That's also a good opportunity for those who would like to invest. For the banking sector, first of all, I have to say that over 90% of banking assets are held by EU owners. And the banking sector is well capitalized and liquid. So the liquidity is almost 3 times above the requirements. LCR is almost 300%, way above countries in the region. Also well capitalized, so regulatory capital to risk-weighted assets, it's almost double than minimum regulatory levels. It means that our banking sector has resources to further continue lending. That's important to say that lending increased significantly over the last couple of years by 6 percentage points from GDP, from 23 to almost 30% of GDP. That's a significant increase. It's the largest in the area. And we did so without jeopardizing the good quality of the banking sector. Actually, we noticed that while lending increased, also NPL slightly decreased, and it is at lowest level, 1.5% overall. Profitability is okay comparing to the region. We pay significant attention to unnecessary costs. I mean, we do not want our banks to face unnecessary costs. For small banking sector, you know that compliance costs are very high. But this is why we have a very good discussion and cooperation daily with the banks in order to make sure that we digitalize as much as possible processes that are cumbersome for banks and incur costs, like compliance, AML, CFT costs, for example. A few words about a mortgage, basically our main topic. Mortgage grew significantly over the last 6-8 years. It's 6-7 times more in 2026 compared to 2018. The sharp acceleration we noticed after 2023. In 2023 and 4, interest rates started to decrease. I showed you the big push of inflation in 2022. So once the market conditions started to normalize, we saw an increase of mortgage. It also came together with political stability, and of course this is an important condition for financial market and for mortgage to grow. But we do need longer-term funding because the funding for the banks, it's basically short-term. And you'll see that mortgage is basically, it's financed also through remittances. But remittances have a natural tendency to lower over time. And we have already seen a decrease of remittances in Moldova. So we have the mortgage financed so far through the banking sector, and mortgage is almost 1/3 of total loans in the banking sector. We have a program with government support, First House, Prima Casa, which means that the government provides some guarantees to the banks. But also there are better conditions, like a very small down payment of up to 5%. And it basically targets younger people. So remittances, as I said, there are, it's a normal phenomenon of remittances to slow down, to decrease, as people who are working in other economies are basically developing and integrating in the new countries, and so they decrease remittances towards Moldova. Where these remittances are coming from, and that's a very nice graph, I like it a lot. It shows the evolution of remittances and basically economic ties of the country from 2014 until 2025. And you see that in 2014, remittances and in general activity was mainly with former Soviet republics. 65%, 67%, while today this share is around 5%. And if we look at remittances from different countries, so outside Russia it's 0.1%. We have high numbers from Israel, almost 17%, US 11%, UK 5.6%, Turkey about 1%, and then the bulk comes from the EU, and of course out of the EU you have Germany, Italy, France, Romania, Ireland, Belgium, Spain as bigger contributors. From the capital market, yes, capital market perspective, it's again, how can I put in optimistic words, it's encouraging. It's room here to improve the situation. And we have a new strategy. That's another institution that is regulating the capital market. Central bank is regulating the banking sector, non-bank financial institutions, insurance sector, and also we own the depository of the capital market. And this is why we invested time and knowledge in a post-trade infrastructure reform, a unified CSD. We have implemented advanced payment infrastructure, and that's a new stock exchange to be operational probably this fall. That's a joint venture with Bucharest Stock Exchange, a market that now has increased a lot and provides good liquidity. And we hope to see dual listings from Moldova in Bucharest and also to have the Chisinau Stock Exchange growing. Well, but the picture is that stock market capitalization currently is 0.16% of GDP. So just keep this in mind that we have room to increase. Central bank's approach to mortgage growth, we have several areas to grow, several pillars. We have the covered bonds framework, and we are working on this draft regulatory framework. We hope to have it approved by the end of this year, and discussions with you helped us a lot to mobilize resources in this direction. Actually, this covered bonds framework is also included in our national EU accession program. Then we need to have the capital account liberalization. The capital account is not liberalized yet, and we are working on steps to gradually liberalize, so to make it possible a natural liberalization before the accession in the EU. Also, we implement EU market integration, and I'm talking here about implementing omnibus accounts and links with EU central securities depositories. And last but not least, we have developed the green housing using the taxonomy to develop green mortgage, especially when we're looking at energy efficiency housing and renovation loans and green bonds. For covered bonds, we are looking into several directions. So we are working to transpose the relevant legislation, Directive 2162 of the EU. Also, we are looking at instruments to provide investor protection, to provide market discipline, full coverage, and the 180-day liquidity buffer, and to monitor and to facilitate the market impact, to have a long-term bank funding and mortgage lending and investor-based funding. About the second pillar, I mentioned the liberalization of the capital account. We are now finalizing, actually at the level of the government, the legislation and to be adopted. And we have several steps at the beginning of the next year and 2028. We are going to gradually increase the thresholds for transactions in and out Moldova. You know that there are a number of notifications and authorizations we have to provide as central bank. And this is going to disappear fully at the accession, but in the meantime, we are gradually increasing these limits. Integration with the capital market, the EU capital market. As I said, the depositories owned by the central bank was established in 2018, and it was a modern system, and now we already implemented omnibus account, and we create interconnections with depositories in Europe. The green housing, the last pillar of our mortgage strategy, it was approved by the government, and we implemented the EU principles for green taxonomy. Okay, and so my first remark here would be that in a few years' time, I hope to see you again in such a format and to tell you about the progress, about the covered bonds, how they are working actually in Moldova, how the capital market is already functioning, and the financing of mortgage is well diversified, and financing is not a constraint for the mortgage market, but we have solutions for it. So thank you for your attention.